Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast for a Wednesday, Valentine's Day, everybody, February 14th, 2024, brought to you by Capital Mortgage Funding, powered by CMG Home Loans, NMLS number 1820. With us, today's guest on Valentine's Day, Miss Lisa Lawson. Good morning, Miss Lisa Lawson.
Morning, everybody. Happy Valentine's Day.
Yes, and my personal Valentine, Mr. John Kolb. Good morning, John.
Good morning there, sweetheart.
There you go. And as directed always and produced by our man in the booth, Roberto Beauchene. Hi, Roberto. And Roberto told me that I have to use the phrase this morning that we're ready to drop some serious knowledge on everybody. So there you go, Roberto. You know what? You just coach me up and I'll try to do my best, buddy. But in any event, everybody, welcome panel. Hopefully we're joined by Becky Alley. Harvey is off on a builder meeting this morning. In any event, it is Valentine's Day, so I hope you spend it with somebody that you love, and you know what, you drop some serious knowledge on them too. But anyways, here we go. Let's get into it. Market movement, as we talked about last week on the podcast panel. We told everybody on the Hardcore Mortgage Podcast that the Fed was going to do nothing. They were going to hold rates steady, and they did. So what happens a week later? CPI, Consumer Price Index, for January was up 3.1%. Folks, what does that mean to you? That means inflation rate is still higher than the Fed wants it. You remember from last week, we pointed out that the Fed was going to meet. And guess what? Mortgage interest rates went up yesterday, and the financial markets, through the financial markets in a flux. Lisa Lawson, the Dow was down over 500 points. What's the point of all this, Lisa? The point is that we are in a very active purchase market. Why? In spite of inflation, in spite of higher home prices, and in spite of lower inventory, people are still buying houses, and they shouldn't hope and pray that rates are going to come down anytime soon, Lisa.
And even if they do, we have programs put in place to safeguard that. We always talk about the refinancing, and obviously everyone knows that, but we have programs like Rate Rebound that pretty much says if you close within 5 years, you can get a lower rate. It has to be at least half a point or less. We'll give you $1,000 credit towards third-party fees and no lender fees. So there's a lot of things that we can do if these are some of your concerns, and that's the reason you're quote unquote waiting to buy. The reality is if you're paying rent, it's 100% interest. It doesn't matter what the rate is. It doesn't matter if it's a 5, a 6, or a 10. You aren't participating in any equity building or anything else if you're renting. So I don't like those arguments. I think they're ridiculous.
And furthermore, Lisa, and we also have programs that help with down payment assistance, correct? So on a down payment assistance program, typically with MSHDA, the rate is below the market rate. And everybody, as we said on the radio show and the podcast last week, for every $100,000, if a rate is at 7%, Lisa, and even if it goes to 6%, per 100,000, people are only saving $65 a month. So on a $200,000 mortgage, that's $130 a month. It sounds like a lot of money, but when you're buying a house on a $200,000 mortgage, going from 6% to 7%, or I should say it in reverse, you're not saving that much, because why? The price of the house, if you don't buy it this year, it's going to go up next year, and you're losing money, Lisa.
Absolutely. You brought up MSHDA and being below market rate. I just did numbers for someone last night. If you do not need down payment assistance, but you qualify for MSHDA income and everything else, the rate is 6%. It's 6% flat. So what are you waiting for? 5.99 or 5.875 for these high five? Don't be a fool. Just, I hate to say it, pull the trigger, because the longer you wait, there less inventory there'll be, your perfect house might be gone, and Lord knows what will happen with MSHDA rates in the future. Obviously they're usually below market, but it would behoove you now to start building that equity and getting the price point this year, the next year, the year after, because inflation goes up, average approximately 7% the past 2 years. So, I think people are using excuses, and I think that comes from fear of rejection, fear of not getting the house they want. And I think the other part of it is the work. Yes, you got to get some documents together. Yes, you got to get out there and look at houses. It means you got to get in the car and it's cold outside. But if it's something you really want, those should not be stopping you.
Yeah. Hey, John Kolb, Metro Detroit, home prices were up over 10% last year. So that means if somebody bought a $200,000 house last year, it's now selling for $220,000. If somebody waits where they're going to wait again and it goes up another 10%, they're just losing money. We cannot be consumed with what the Fed is going to do, John. And we talk about it all the time. Whether we agree or disagree with the Fed, we know what they're going to do. Or we should say, John, we know what they're not going to do. They're not going to lower the rates, and the more not going to come down substantially. But what is going to happen, John, the housing market is going to continue to stay on fire because of the lack of inventory, and prices are going up. So people are being nickel wise and a lot of dollars foolish. This isn't just a dollar here, a dollar there. This is tens of thousands of dollars that people are costing themselves, hoping, praying, wishing the Fed is going to drop mortgage rates. John, help me out here.
I mean, I don't know what else to say. We say it every week, right? Don't wait. I mean, if you're going to wait for rates to come down, you're losing, like you just said, Harry. Upwards of 10%. I want to venture a guess over the last 2 years, it's going to be between 6 and 15% that people have lost in terms in equity by waiting. And so yeah, if you're going to talk about a house that was worth 200 and 15% 2 years later, it's now worth 230. You just lost all the money that you were going to save with that lower interest rate. So buy now, take the rate that's going. When the rates come back, like Lisa suggested, we've got those rate rebound programs. We can even offer zero cost refinances at times, and get the refinance done. That way, you've locked in what your mortgage is at, what your value was at when you bought it, and you don't have to worry about the appreciation hurting you. The appreciation should be helping you. And yeah, like I said, I don't know what else to say. I mean, if people don't understand it, then I can't fix stupid.
And I want to
there you go.
piggyback off that because everyone is fear mongering. The Fed does not control mortgage rates. The Fed controls short-term lending rates. Yes, there's always a short impact and there's a short reaction, but whatever the Fed does is not directly correlated to what mortgage rates are going to be. It's not like an issued rate from the Fed. And I talk to people on the phone all the time, and that's what they think. And it is absolutely not how it works. So stop listening to the fear mongers and do what's right for yourself.
Yeah, you're losing money if you don't. And Lisa, you can't believe everything you see in the news and hear in the news, but it's really the interpretation and the reality of what's going on. We're also joined by Mr. Harvey Freed this morning. Harvey, you look great. This is the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, February 14, 2024, brought to you by Capital Mortgage Funding, powered by CMG Home Loans, NMLS number 1820. Harvey, home prices at Metro Detroit were up over 10% last year. There's a lack of existing home inventory on the market. And let's talk about new construction, Harvey. New construction is on the rise in metropolitan Detroit with the lack of existing inventory. Builders are having trouble keeping up with the demand and keeping up the labor demand. But we're not having a problem offering new construction programs. Harvey, you have a meeting with a builder today. What are you going to go over with that builder?
Yeah, just the two types of draw programs that we offer, a one-time close and a two-time construction draw program, which means that you have a construction draw program, and then we finish up with an end loan. Yeah, prices, Harry, I've already gone through the roof on existing homes, so you might want to take a look at new construction. There's no doubt that there's so many benefits to a new home. One, of course, is that everything's brand new. It's built to today's specs and efficiency. So you're getting a house that might save you even on money on electricity, your overall footprint, because the appliances, the furnace, the air conditioning units, everything that goes into a house is all built for 2024, or maybe they just put some stuff in from 2023, but really all brand new. So new construction, definitely. Was involved in 3 new builds myself. Nothing like having a fresh new house. Plus, the builders are guaranteeing warranties with these. So you get a minimum of a 12-month warranty here in the state of Michigan. A lot of builders will extend that to 18 months. And again, another opportunity for families to take a look at something different. Everyone looks at existing homes, but take a look at new construction and how easy it is to get into these programs. A lot of times we close on them here, just do end loans, because someone can run up upon a spec home that's already been built and they can close in 60 days. So it doesn't always have to be a year plus. You can maybe buy a new construction home, a spec home that's all ready to go in the next 60 days.
Yeah, before I get back to you, Lisa, I want to go over with John. You know, John, not every lender in the lending community offers new construction loans, correct? You've done a lot of research on it. I know you've done it in the last couple of days. Why don't you expand upon that? Because not every lender has a new construction program, correct?
Right. I mean, there's so much more to a new construction program than just originating a loan and getting it closed. You have to have a whole division behind you that is going to help facilitate the draw programs, the title updates, making sure that the work is being completed for the borrower, for the builder, everybody's getting paid. You know, at Capital Mortgage Funding, we have a fantastic renovation department. We have a fantastic new construction department where after the loan closes, you've got your dedicated representative in the construction department that's going to help you facilitate all that. Any questions, you call them. You know, you can always call us as well. So we're going to work. You're going to have two teammates on your side through this whole process to get all the way done. And whether it takes 3 months, 6 months, 18 months, that person's going to be with you from start to finish.
Yeah, that's unbelievable, John. We've done that. We're getting a lot of calls right now on renovation projects, new construction projects, and as I said, not every lender offers that program. Lisa Lawson, let's talk about what's coming up on the weekend for you. You're doing the bridal show with Becky Alley this weekend. Let's talk about that at Ford Field. Talk about that and talk about a special program we have for new brides and grooms.
Right. So on Sunday from 12 to 4 at Ford Field, Becky and I will be there and obviously meeting all the new newlyweds and all the new spouses that we're going to hope get into new houses this year. And there's a program exclusive to us called Home Fund It. And it's a match for every dollar you put in. They'll match up to a $2,000 match. So in essence, you get $1,000 in this account, we'll give you $2,000 grant. So there's $3,000. But the really cool part about it is through crowdfunding, like online crowdfunding. So you can send this link to your family, your friends. Maybe you have people who live out of town. They don't know what to get you. They can't make it to the wedding shower, or the wedding. Instead of just writing you a check, they can put money in this account and it will be matched. It'll actually increase what you can utilize, and you can use that to buy a house. And there's another component that allows you to shop online with over 1,000 major retailers. And we're talking big retailers like Target and Home Depot. And they will give you money. So it's a great program. It's super easy. And it's, the longer you're in it, the more money that will accumulate. And why not?
Hey, Lisa, let me do some simple math with you. Okay. So
Sure.
let's just say you have a bride and groom at the show, they're talking to you, and you say to them, listen, if you invite 100 people to your wedding and they each gave you $50, that's $5,000, right? That can go into that new home funded account. And how much are we going to match that $5,000
Up
with?
to $2,000. So we'll give them $2,000. So now their $5,000 in gift money has become $7,000, and they didn't save a penny of their own money.
That's right. And so even if they don't put any of their own money in, or they're going to add to that, you could have a pretty nice down payment for a house. And with rents going up, the sheltering is going up. The prices of rents are going up. For newlyweds looking to get into homes, whether they have the down payment of their own or they get it from the gifts of their friends and relatives for their wedding, they should be in a new house rather paying rent, Lisa.
Absolutely. Absolutely. So, this program is specific to us, and it's kind of one of a kind. There's nobody else that does it. I think it's genius. And if somebody's willing to give you free money and help you get into a home, I don't see why you wouldn't take advantage of that. I really don't. I don't even care. Say you have $100,000 already saved. Why not get another $2,000? It costs you nothing. It's a no-brainer.
Hey, Harvey, I'm going to go to you. Then we'll go around the horn for the last words. I certainly have some last words, but Harvey, that program's unbelievable, and rents continue to go up at an alarming rate, Harvey. I mean, but you're paying 100% interest. If you can get gifts when you get married of only $50 per person from 100 people, and then you get another $2,000 on top of that, are you kidding? That's better than a 401k.
That's pretty sweet. $250,000 house here on an FHA loan. A lot of our buyers might be some credit deficiencies coming up with getting the funds to close. but 3.5% required by FHA on a 250 house is $8,750. I did some numbers. If you buy a 250 house, you're looking at about $17,000 FHA, about $17,550, and $7,000 of it can come from this program. So it's an outstanding program. Again, it's additional because of the $2,000 match with a minimum of just $1,000 invested in the program. That's $3,000. But I like your scenario, Harry. Maybe those families would be just interested in giving about $50 a person. That's low. A couple gets invited to a wedding. I don't think I've written a check for less than 100 in a long time. So yeah, most people are willing to do anything they can to help your marriage and move in the right direction. Home ownership is a great step for any newly married couple. That's for sure.
Yeah, before we go to last words, I'm going to go to John Kolb. John, who do we have on the Hardcore Mortgage Real Estate Business Show this weekend?
We've got Logan Wirt from Keller Williams Metro in Royal Oak. His group is called Indulge Property Group. Logan has been with us for a long, long time, and he's a great asset. Been a realtor in the area for over 10 years, and grew up in this area. Knows everything like the back of his hand. So he's going to be a great asset on the show. Can't wait to pick his brain and really catch up with him because it's been a long time.
Yeah, it's good to have an old friend on the show. Looking forward to seeing Logan this weekend in the studio. Last words of the day, Wednesday. Happy Valentine's Day, Lisa Lawson. Last words.
Yeah, hey everybody. Happy Valentine's Day to everybody. Speaking of love, I'd love to get you into a new house. Let's pick the right mortgage program. Let's give you some options and let's get you in. So give us a call. And if you happen to be at Ford Field or downtown Detroit, come say hi to Becky and I on Sunday from 12 to 4.
Wonderful. John Kolb.
Yeah, guess happy Valentine's Day to everyone. It's such a big holiday out there for all the lovely couples. And hey, I reiterate what we said earlier, that you just don't wait. We say it every week, and people are losing that are waiting. We just need to reach more people with our information so that they can help make money instead of lose money.
Appreciate you. And last but certainly not least, Mr. Harvey Freed.
Okay, here a little extra twist on it here. We've talked to a lot of so-called experts. I'm doing the air quotes without doing them. The experts in guessing on where the mortgage rates are going to end up. But historically speaking, again, that was a conversation this morning on a really good show, CNBC, going over financials. Is 6, 7, 8% is typically, historically speaking, very, very solid and great interest rates to be buying in this type of market. So let's just call it, if we're in the 7% range now, it's still a fantastic time to buy. If some experts telling you that the mortgage rates are going to come down in 6 months, well, good. We'll be the first one to call you if that happens. If that happens, that's a positive. And there's nothing that really shows us now looking forward, Harry, that that's going to happen. So again, buy your house, enjoy it, move your family in, and we'll show you how to get in for the least amount. We'll show you how to save money. How's that? We will save you money.
Yep, that's for sure, Harvey. It's a very active market. We definitely can save you money. I can save you money. Go to icansaveyoumoney.com. It'll go right to Capital Mortgage Funding. That's right. icansaveyoumoney.com comes right to Capital Mortgage Funding. Last words for me today are the market is still very, very active. It's a purchase market in spite of all the inflationary fears, news, higher prices, low inventory. If that's one takeaway you take away from this podcast, that should be the one. Also, another one is if you're hoping, praying, wishing on a prayer, interest rates are going to come down anytime soon. They're just not going to. And as Lisa said, for 30 some years, we've been calling our clients when rates come down. We will let you know so we can refinance you and we can save you money. There you go again, Harvey. icansaveyoumoney.com. We will continue to save everybody money. Also, last but certainly not least, looking forward to seeing Logan Wirt on the show. It's going to be a great hardcore mortgage real estate business show this weekend. Heard every Saturday morning on 97.1 FM from 9 to 10. We're in our 24th year of doing the show. So for Roberta Beauchene, who wanted me to drop some knowledge on people this morning, I think we did, more so from Lisa Lawson, John Kolb, and Harvey Freed. This is Harry Glanz saying, we'll see you soon.